Inventory is continuing to pile up on the California housing market. In fact, in one major region, active inventory is up 44.5% over this time last year, while at the same time, sales in this region are down 2.3% relative to this time last year. That's a recipe for major price declines ahead, and in this video, we're going to take a look at which California regions are going to get hit the hardest. Plus, new data on mortgage payments is giving California homebuyers even more reason to celebrate. This all comes from the latest print from the California Association of Realtors, which we're digging into in today's California Real Estate Roundup, brought to you by Blueprint. If you're buying a home in California, don't pay an agent 2.5% or even 3% to open doors for you. Buy smarter, save a ton of money, and work with an agent who actually has your back when you buy with Blueprint. Learn more at buywithblueprint.com. Now let's get into the data. So again, we're looking at the latest data from the California Association of Realtors. Let's just first take a look at a statewide overview. The number of homes sold this month is 262,050. That represents a 2.8% growth year over year. The median sales price of a home in California climbed to $888,740. That represents a modest 3.4% growth over last year. Now we get to inventory. The unsold inventory index, which is another way of saying months supply, climbed to 3.2 months. That's a full 33.3% higher than this time last year. Now that's a lot more inventory, and when we get down to the regional breakdowns, we'll see which areas of California really have the most oversupply of inventory right now. And lastly, when the market gets more crowded with inventory, the market tends to slow down. That's why we have a median days on market of 22 days, which again, nationally is a pretty quick market, but this is California. California is one of the fastest markets in the country. 22 days is a number of days for us. That's a pretty high number of days for us. And that represents 25.7% more days than this time last year. So statewide, we have a market where price growth is slowing, inventory is ballooning, and the market is slowing. Let's take a closer look at our sales numbers. So now we're looking at the number of homes sold in California going back to January 2005. This month, we racked up 262,050 sales. As you can see, sales are still depressed. I mean, obviously, when we look at 2021, we see this incredibly high level we reached then. But if we look at the 2017 to 2018 to 2019 average, we're still well depressed relative to those numbers. Home sales are still down relative to the norm, and that's one reason that inventory is creeping up. Now we're looking at sales growth by price segment, and this is some of my favorite data that the California Association of Realtors puts out. When we look at this graph here on the left, we can see that sales actually grew for the higher end of the market. That's homes that cost $750,000 and above, and sales shrank for the very low end of the market. Now, this isn't surprising when the median price for a home in California is in this higher area of the market. Basically, what this is telling us is that average or median homes and above have actually seen an increase in sales, and the very, very low end of the market has seen a decrease in sales because prices are still appreciating. The very bottom end of the market is just getting smaller. And we see that idea reinforced with this graph on the right. We can see that sales of homes that cost less than $500,000 shrunk slightly, while sales of homes in the $500,000 to $1 million range grew slightly, and sales of homes that cost $1 million or more also grew slightly. Where can I draw a line? There, I can draw a line. Now, these numbers are much more modest than the numbers we saw last month in terms of sales by price segment. If you want to check out last month's update just to compare these numbers with last month's numbers, I'll link up to the top of the video there now. So check that out if you want. Now, these numbers are actually calmer than last month's numbers in terms of higher priced homes having elevated sales. Let's look at a historical chart so we can see the trend. This graph shows sales by price segment over the past 15 months. Now, this, I don't know, is that dark blue or purple? This purple color represents sales of homes that cost more than $2 million. And as you can see, these numbers really ramped up, peaked, well, there's a bit of a trend break there, but peaked around here in the March-April timeframe. And now this trend is falling back down. The second tier is homes that cost $1 million to $2 million, and you can see a similar trend, though not quite as pronounced in those numbers. So what we see here is peaking in the spring of this year, there was an elevated number of sales at the top end of the market, which probably skewed median prices higher than home appreciation was actually performing. But fortunately, we're beginning to see this trend recede, such that this month we see only modest growth year over year in high-end homes. This is a trend we should welcome because it means a more moderate, more even housing market for consumers. Now let's take a look at price trends. The California median home price had its smallest yearly gain in 11 months. I don't know why Carr wrote since in 11 months. I think this graph needs to be edited a little. And as you can see, we had a price peak in early 2022 as rates were climbing rapidly, then another big price peak earlier this year, and now we're just slightly under our recent price peaks. Now there's something I want to point out looking at this graph, and that is the overall trend of pricing since bottoming out, say, around 2012. If we draw a rough trend line, I think it would look like this. We come up this way, we're following these peaks and valleys, and look at that. Now what we see is, of course, the obvious overappreciation of homes during the pandemic, but then when rates doubled, we actually fell right back down to this trend line. And now in 2024, we're not too far above it. I look at this and 2 points come to mind. One, the price gains during the pandemic were extreme, but now that we've gotten past that period, we're getting back in line with where historical trends are. So if you're still calling for a major price decline, if you still expect home prices to drop 50% because there was a 3-year spell in which they grew 50%, well, you're probably going to be waiting for a very long time. And secondly, looking at this chart, seeing the steady, powerful increase of home prices since the end of 2011, you have to ask why. And I don't mean to get on a political soapbox or anything, but to me, the answer is obviously inventory. We had too much housing in America here. We abruptly stopped building new houses, and since then, we've been playing catch-up. Anyways, I digress. Let's just get back to the data. Now we're looking at median price growth by price percentile. So this 0 to 20 represents the least expensive 20% of homes on the California market, and this 80 to 100 represents the 20% most expensive homes in California. And what's reassuring about this chart is that the lowest price homes and the highest price homes appreciated similarly. And I like that there's kind of a inverse bell curve here. Most importantly, these numbers are much more moderate than last month's numbers in terms of the discrepancy between high-priced homes and low-priced homes. Although something interesting to point out, here, the top 20% of California homes are broken down into the 80 to 85th percentile, 86 to 90th, etc. And as you can see, the highest performer on this chart is the top 96 to 100th percentile of homes. So this past month, the most expensive of the most expensive homes is where we actually saw the most price appreciation. And speaking of the discrepancy between the highest priced homes and the lowest priced homes, this graph shows the share of $1 million home sales and the share of home sales under $500,000. And what we see is that pre-pandemic, almost 50% of home sales in California were for homes that cost less than $500,000, and only 15 to 20% of home sales in California were homes that sold for $1 million and up. Then we hit the pandemic, and these numbers switched places. And for a period of time that followed, and even into here, if you want to do a little Donald Trump Sharpie extension like on a hurricane map, you can see that it was a race month to month as to which sector had more market share, homes under $500,000 or homes over $1 million. And of course, we know the story here. Low-income workers were not seeing wage increases. High-income work-from-home workers were seeing wage increases on top of PPP loans and all sorts of nice bailouts for the white-collar workers. And that distorted the kinds of homes that are being sold in California. Now, we've already looked at the recent trend of sales growth on the top end, and I think you see that reflected in this graph here, where homes that cost $1 million or more had their largest market share in recent history, and homes that cost $500,000 or less had their lowest market share in recent history. Fortunately, we're beginning to see that trend reverse itself. This line's moving down. These are homes that cost $1 million or more. This line is slowly moving up. These are homes that cost under $1 million. And so hopefully in the next 1 to 2 years, we'll return to the equilibrium we're used to. Not quite this extreme, because let's face it, homes have gotten a lot more expensive. It's a lot harder to buy a house in California if you don't make a lot of money. So I think the share of homes sold in California for $1 million or less will never reach this height again. We'll never see more than 40% of homes sold in California sell for less than $500,000 again. But hopefully we reach a new equilibrium in which we're selling more $500,000 and less homes than $1 million and more homes. Again, all in the effort of a healthy, moving California housing market. Now we're looking at the share of homes sold above asking price, which fell to a 7-month low of 40.3%. At the peak of the pandemic, we had 72.9% of homes selling above asking price. Now, 40.3%, it's a 7-month low, but if we look at 2018 and 2019, we can see we range from 40 to say 20% in a typical year. So we're still on the high end in terms of homes selling above asking. And we're just about back to pre-pandemic norms when it comes to listings with reduced prices. The share of listings with a reduced price on the market right now is 36.1%. That's about where we were peaking in 2016, 2017, a little lower than where we were peaking in 2018, 2019. But what's interesting is that the median reduction amount is 4.8%. That's this gray line that starts high and, of course, moves lower as we get out of the Great Recession. Right now, we're at 4.8%, which I would say is a little bit higher than where we were in that 2017, 2018, 2019 period. So we have about the same number of price cuts as we're used to seeing pre-pandemic, but the price cuts are just a little bit bigger. That's good news for home buyers. Also good news for home buyers is what we see when we look closely at the list price versus sales price numbers. So the red line is the median sale price of a home in California, and the blue line is the median listing price of a home in California. Let me tell you what I see. When listing price drops, sales price drops shortly thereafter. We see it again and again. Listing price starts to go down because realtors start to see the market is shifting, and they know they have to realign their expectations. And sure enough, the market is shifting and the shift occurs. We had this huge drop-off in listing prices as rates began to double. And of course, we saw a similar drop in sales prices. Well, recently, we've had a small but pretty significant drop in listing prices and a similar drop in sale prices. So if we look at this chart and we see how far one bottom is from the other in terms of where listing prices bottom and then where sale prices bottom, we can see that we're probably close to a bottom right now. In other words, prices are falling, as they should be with all this inventory that's piling up, but because listing price has recently rebounded, we should see sales price rebound in the next couple of months. TLDR, this winter is a good time for home buyers. Now let's take a look at inventory numbers and where in California we're seeing the most inventory. All right, so statewide active listings have reached their highest level in 2 years. That's us right here. You see inventory has been growing all year. We're back to 2022 levels of inventory. 2022 is when prices collapsed because interest rates doubled. But of course, we're still not at the level of inventory that we're used to seeing pre-pandemic. Now we're about to look at inventory by region, but first I want to show you this home sales by region pie chart because it shows you how large each region is. The largest region is Southern California, where we see 43% of home sales. And then the next two largest regions, the Central Valley and the San Francisco Bay Area, they're about the same size. And together, they also represent 43% of the California housing market. So you have Southern California as the biggie, then the Central Valley, then the SF Bay, then you have the Central Coast, which represents 4% of the market, the Far North, which represents 3% of the market, and then the other counties combined, 7% of the market. So how are these regions doing in terms of inventory? Well, guys, this chart is a doozy. This is active listings growth year over year and sales growth year over year. And I teased this at the beginning of the video, but I want to bring your attention right to Southern California. Again, Southern California makes up 43% of the California housing market. And this California region saw a 44.5% growth in active listings over last year, while at the same time, sales have decreased by 2.3%. If you're a Southern California home buyer, this is exactly what you want to see if you're gearing up to buy a home. Of course, other regions have also fared very poorly. In San Francisco, we saw a 42.7% increase in active listings and only a 4.8% increase in sales. In the Central Valley, we see a 40.9% increase in active inventory with only a 0.8% increase in sales. Central Coast, 36.7% increase in active listings and only a 3% increase in sales. And then here in the Far North, we have a 9.7% increase in inventory and a 5% decrease in sales. Now, these numbers portend some serious price drops in the future. Let's take a look at each region's snapshot for this month to see where each region is right now. And so far, Southern California is holding up pretty well. As mentioned, we saw a 2.3% decline in the number of home sales, we saw a 4% increase over last year in the median price of a home in Southern California to $863,500. In terms of unsold inventory and median days on market, we're actually right where we are in the statewide numbers, with 3.2 months of supply on the market and 22 days as the median days on market. And when we look at sale price to list price ratio, California home prices are maintaining at 100%. So the picture right now for Southern California is okay. But again, looking at the active inventory numbers, seeing the inventory that's piling up, I think this winter is going to be a great time to buy a home in Southern California. Moving up to the Central Coast, we actually had a 3% increase in sales, and the median sale price of a Central Coast home climbed to $1,035,000. That's an 8.9% year-over-year growth. However, unsold inventory is a little bit higher than SoCal at 3.5 months. Median days on market is 1 day faster at 21 days, and the sale price to list price ratio is 98.7%. So what we're seeing in the Central Coast is that they've had a banger year relative to the rest of the state, but prices are beginning to see sliding. Homes are selling for a little bit less than what they're being listed for, and this is probably the beginning of the Central Coast beginning to come into line with the rest of the state in terms of lower single-digit year-over-year price growth. Looking at the Central Valley, we see that home sales grew 0.8% year-over-year. The median home price is up 3.1% from last year at $500,000. The unsold inventory index is relatively low for the state at 3 months. Median days on market is exactly on par with the state at 22 days, but the sale price to list price ratio is 99.1%. This is a pretty low sale price to list price ratio for any part of California, and suggests that the Central Valley might end the year in negative territory in terms of median price. Now we're looking at the Bay Area, which has some of the most interesting numbers. Sales are 4.8% above this time last year. The median price of a home in the San Francisco Bay Area is $1.24 million, which is down 1.6% from this time last year. Supply is constrained for the state at 2.5 months. The market is relatively quick at 20 days. And the sale price to list price ratio is 100.3%. So the story in San Francisco is unique compared to the rest of the state. Median price is down from last year, but sales are relatively high, inventory is constrained, the market's fast, and the sale price to list price ratio is above 100%. So if you're in the Bay Area, you probably won't have as easy a winter season as a home buyer. It looks like the Bay Area market is already fueling back. And finally, we get to the far north, where existing home sales are down 5% year over year. The median price of a home in the far north is up 7.7% year over year to $397,250. There's a ton of unsold inventory on the market, 4.8 months. The market is crazy slow at 31 days, and the sale price to list price ratio is incredibly low at 97.8%. So look, the far north has had a banger year, way ahead of the state in terms of year-over-year price growth. But the forward-looking indicators are awful. The far north, as small of a market as it is, has a ton of inventory, is super slow, and prices are not keeping up with list prices at all. So look, if you're in the far north and you're thinking about buying a home, just wait. Give it a few months. I would suggest you wait seriously until February. Nationally, February is when home prices are at their lowest, and I think in the far north of California, this February will see very attractive home prices. And lastly, some fantastic news for home buyers. Mortgage payment growth turned negative for the first time since July 2020. So in this graph, the blue line represents year-over-year price growth, and the red line represents year-over-year mortgage payment growth. Now, pre-pandemic, mortgages got more expensive most of the time, but sometimes mortgage payments would dip down. Mortgage payments got very low as mortgage rates got super low post-pandemic. And then, of course, mortgage payments grew tremendously. And remember, this is year-over-year growth. So every time we're above the 0% line, it means mortgage payments are growing month over month. Well, for the first time, the red line has dipped below 0%. Mortgage payments this month are down 2.6% from this time last year, which is an amazing number to see. It means if you're buying a home this month, you're paying less than if you bought the same home at the same price this time last year. Of course, this time last year, the home was a couple percentage points less expensive. So I guess you wouldn't be buying the same home for the same price. You'd be buying a home for the same price. But mortgage rates are continuing to fall, and so we should see this mortgage payment relief continue into the winter. That's why I'm very bullish about home buyers entering the market now. If you're thinking about buying a home in California this winter, then you're entering one of the best periods to buy a home in California in a couple of years. But you have to be careful. New rules have made it more expensive to work with an agent in the state of California. I made a video about it up here, so check it out, stay informed, and subscribe here for more videos about the California housing market.